Thanks for joining me on my market report. My name is Mike, and this market report is about mortgage rates. We like to cover what's impacting them on a daily basis, kind of bring uh, to consumers what's going in on a daily basis, what's driving them, whether it's an economic report, whether it's a headline news, or something that's driving it and going up and down. What a lot of people don't realize that mortgage rates do move up and down on a daily basis, and it's kind of like your stock price when you watch the stocks going up because these are packaged and sold onto Wall Street as mortgage-backed securities, and that's what a lot of people may or may not realize. They see stuff posted and may not realize that rate may not be there by the time they take action. So, anyways, we like to kind of just bring it out, let you see what's driving the rates, what's kind of if it's going in an up or down position, if it's going sideways. Uh, things like that of that nature. We don't get into rate quotes because there's just way too much stuff out there, variables that go into a rate quote. There's different loan programs of those natures as well. But if you guys like one, please reach out. I am a loan officer. I do work with a national lender. We're here to help and be more than happy to talk about whether it's rates, mortgage programs. If you guys are looking at different solutions, maybe thinking of using equity in your home, maybe pay off some debt, or maybe go from a 30 to a 15 year, or different things, or maybe you got kids are going to be planning to go to college sometime soon, and you're trying to figure out ways to finance that. There's different avenues we have worked with people and provide solutions to help them out and work with those. So please feel free to reach out. We'd love to be able to talk to you a little bit about those. I enjoy talking about these things, and so without further ado, why don't we jump right into it? We'll start with the economic report. Today we got a couple home price index, HPIs. We'll start with the Case-Shiller. They are track these 20 largest markets in the U.S. and it's month over month. So back in March, it jumped at 1.6%. Forecast was supposed to be a slight uptick in the trend at 1.7. However, it came in at 1.6%. So pretty good numbers there. And it basically, if you look at year over year, it looked at went up 14.9%. Now we also got the FHFA home price index. These guys kind of follow the conventional loans, your Fannie Mae, Freddie Mac conventional loan programs. So these don't track like your luxury homes or of that nature. These are tracking more your moderate size home prices. And they went up 1.4% back in March as well. However, it did get revised a little higher to 1.6, and it jumped up a little further to 1.8%. And they saw a year-over-year price to 15.7%. So some pretty astronomical numbers right there. Consumer confidence came in for the month of June. May's numbers had a revision from 117.2 to 120. Forecast was calling for 119, and it spiked all the way up to 127.3. So people are feeling a lot more confident in the month of June than they were feeling prior. Let's take a look over at the headline news, and right now stocks are up. Stocks are feeling pretty good. Yesterday it was announced that the big banks had passed their stress test, so now they're able to find out about their dividends, how much they could pay out. 5 to 6 largest banks basically decided to increase their dividend payouts. So that was good news. Those bank stocks went up. The only one that did not pay out was Citibank, and of course their stock kind of went downwards. We also got Fred Sparkin. We had a few Fed speakers, but he's mentioned today. He had made some comments that his projections are that he thinks the bottleneck might be finished up by around end of the summer. The Fed should watch prices very closely, but he kind of estimates that this bottleneck or in the supply chain should hopefully be cleared up by end of summer. Let's take a look, see what's going on with mortgage rates. And mortgage rates are doing okay. They're pretty much more of a sideways pattern, as you can see. We started a little bit lower, but we have risen up. We're approaching the 25-day moving average. We're only up 2 basis points. It's not enough to have any change in pricing, so pricing should be unchanged from where we closed off yesterday. And here's 10-year Treasury. As you saw, we went down, broke below the technical here, and even touched off this technical floor. And today we tried going up, but pulled back a little bit in some early trading at around usually 8:20 East Coast time when the market's kind of just usually I'll have that. There's usually sometimes a little bit of a spike, and that's what we saw. But you just pull back. We're just below 1.49 right now, and keeping this range from about 144 to about 150 range in treasuries here. So no no extra pressure on mortgage-backed securities. So mortgage rates again remain unchanged. And yeah, please feel free to reach out. We love to talk to you guys. If you guys have any questions about anything, we'd love to be able to see what we can do for you guys and answer and provide any assistance we can. You guys have a great rest of your day. Thanks so much for watching. And please smash that like button if you like these videos. And we'll look forward to see you guys in tomorrow's video. Bye-bye.